Well, it's March 7th. I'm LA Little, and this is a weekly review. What we got last week was a push to the downside. It's been coming, folks, and we're starting to see it crack. You can see the percentages on the way down here. Bitcoin got a bit of a rally, and the dollar, but outside of that, everything was down. Now, Buffett would say, great, let's celebrate. Things are getting cheaper. Well, that's true. It's just that they could get even more cheaper, so maybe we got to hold off on that celebration a little bit. Saving grace last week was the mega caps. You got Microsoft up 4%, AVGO 3.5, Oracle 5. That kind of saved the day, if you will, because if you look at the sectors, other than energy, these things got smoked. I've been hearing for a while that you got to be overseas. Well, yeah, that's true until they go down. On the technical side out here, you can't ignore oil. Oil's the main thing. If you look at it, up 33%, 57% since the beginning of the year. This thing is causing problems everywhere you look. And if you look at the projections here, 110, 115 on the USO, it looks like. And that's leading to havoc in the markets. Now, the markets were already trying to head lower, but now they got a reason, right, with the oil doing what it's doing. We broke last week here on the Dow. This week we break again. We didn't even get the retest, which is usually what happens. Still could get it, but right now this thing is struggling. And that's actually a bigger deal than it looks like, because if you look at it on the weekly now, you've bled into the weekly change trend there. S&P, after weeks and weeks of trying, finally bearishly or bullishly breaks. In other words, that bullish retest region off of this swing point high had held all the way through here, finally breaks. And you can see it here on the daily. Swing point lows, 3 of them at once, broke to the downside. Of course, if you got the indexes breaking down, you probably got sectors breaking down. Of course, that is what the case is. Here's the XLF on a weekly. Blows through those 2 swing point lows, right? There was 2 of them, one here and one there. Going after that one, and it's probably going to get a bounce back up here, retest, and then come back down. But now you've got blood in the streets, so to speak, on sectors, as the XLF joins the mags on a break of a swing point low on the weekly time frame. And it's not isolated. There's others. Here's the IBB trying to break, the ITB trying to break, IYT trying to break. I can go on and on. Mags already broke, etc. Your best risk on type indicator is Bitcoin right now. It has been for a while. You got a nice big spike here, but what they do, they didn't even get to the bearish retest region. They sold it right back down. Looks like that was just short covering. And for so long, I heard, you got to buy EEM. Well, yeah, I mean, it looked great on the way up, but here you spike and then you spike the other way. Folks, that's $10 on a 65 basis. That's a pretty big move. Mean time to failure is what I use to determine how long a trend is going to last. And what we got now is we got breaks in almost all the dailies. This has been bleeding to the downside. Now they're all breaks. It looks like the majority of these are going to be towards April and May in terms of becoming extended again and needing to change. And we're just starting to see the breaks here on the weekly. Mags were the first ones. This week we got XLV and we got XLF. And so you're starting to see the breakdown here, and as I talked about just a second ago, there's many more to come. Biggest issue, as we all know, is uncertainty has gone through the roof. You can see it here on this chart out of the Fred database. If you think about what's coming, right, oil's going straight with the indexes. They're tied at the hip right now. So if oil goes up, indexes are going down, vice versa. You got more sectors and index breakdowns likely. And the question really is do they come immediately, or do you get a bounce first, then they come? And a lot of this has to do with headlines, right? And the uncertainty with the war headlines and anything that Trump may or may not tweet. So, my take is here, you should be in cash. I've talked about that for a while. And if you're not, well, you're probably suffering. Have a great one.